Good evening and welcome everyone. This is Economics Unbound. Nana and I are ever so happy that you joined us this Thursday night. Tonight we are going to discuss sovereign wealth funds. Nana, do you know what a sovereign wealth fund is? And do you know if we need it as South Africa?
Hello everyone and welcome to Economics Unbound. Yes, Tans, a sovereign wealth fund is a state-owned investment fund or entity which comprises of pools of money derived from a country's reserves. Reserves are funds set aside for investment to benefit the country's economy and its citizens. The economic freedom fighters have argued in their manifestos and beyond that we need one. I am intrigued. But some economists have argued that this is not necessary and we do not have the money for one. It is argued by some that our problems are systematic and structural, and they do not always stem from managing resource booms and busts or debt denominated outside our own currency, which are the typical reasons for having a sovereign wealth fund. But Tans, maybe I should ask, what opportunities do we lose by not having one?
Well, Nana, we are an extractives economy, even though we've got a big services sector. That means that much of what we do has to do with mining things and bringing them up to the surface. We are one of the few resources economies in the world that do not have one. Other economies with gold, copper, platinum and other minerals have sovereign wealth funds, and some economies have more than one. For example, the rich Middle Eastern economies have these, and sovereign wealth funds, please remember, were deployed to help economic growth and boost it across the world during the global economic slump of 2008.
I can think of a few places in our current economic downturn where I would deploy the funds if we had one. Tans, I learned that Chile has one and it's called the Copper Fund.
No, Nana, that's just its nickname. The proper name for this fund is the Economic and Social Stabilization Fund, and it is a publicly owned investment corporation that manages the sovereign wealth fund for the government and the people of Chile, and it is resourced from any surplus revenue from Chile's copper exports. This fund was created in 2007 after the dissolution of the previous fund called the Copper Stabilization Fund. Please understand too, Nana, that the main export of Chile is copper, and when there is a slump in the international price of copper, the Chilean economy gets ill and its businesses suffer. So when this happens, the fund is deployed to restore the economy. It is used to overcome fiscal deficits during times of low growth. Hence our question, do we need it?
Tans, could you tell me more about this fund?
Well, Nana, the fund gets money from the Chilean government every year when there is a fiscal surplus. The fund also gets the resulting positive balance between the difference between the surplus to the pension reserve fund and the Central Bank of Chile.
Tans, back home here, the rand is very vulnerable to what is happening in the resources markets. The platinum prices and gold prices do affect us. When these prices weaken, the currency feels it. South Africa is one of the world's largest, most prolific producers of platinum group metals, so this is understandable. Tans, imagine if we could have a fund that could help the industry and the economy during tough times.
Well, Nana, there are many types of mandates for sovereign wealth funds. Take the Norwegian example for example. Norway's sovereign wealth fund was established to manage petroleum revenues from the North Sea oil fields. Oil and gas companies represent 5.9% of its equity investments. According to its 2018 annual report, it currently invests in more than 9,000 companies worldwide. This is one of the world's, in fact, I think it's the world's largest sovereign wealth fund, and it is dripping, literally dripping with petrodollars. The Norwegian fund is run by the Norges Bank, and part of its mandate is to reduce oil price risk to the Norwegian economy.
PwC found that one of the advantages of World Sovereign Fund can be low inflation. A key finding of their work is that countries with sovereign wealth funds have lower inflation levels than those without a fund. The second advantage is lower borrowing costs. Investors may be willing to lend money on better terms to countries which have a sovereign fund, whose assets will often be held in safe currencies like the US dollar or the euro. It could also lead to improved governance. Running a fund is not easy. It requires a professional and financially literate organization. The experience provided by running a fund may create a conveyor belt of competent bureaucrats able to assist in running the country. It may also lead to more efficient government investment. The gradual rise of sovereign wealth funds could in theory be broadly positive. More efficient government investment potentially means more government money. On the other hand, sovereign wealth funds may also have disadvantages. 1. Money and politics are a combustible mix. If you don't get the formula right, it can blow up in your face. 2. One of the biggest concerns is that sovereign wealth funds are not very transparent about their dealings, as a result of which they arouse both suspicion and concern about their investment intentions among the public. Sudden inflows of foreign currency into the economy can lead to Dutch disease, where appreciation of the domestic currency can damage the competitiveness of export-reliant sectors like manufacturing. However, each sovereign wealth fund is different. The details of the fund's objectives, its funding structure, investment strategy, governance and accountability will all have a profound impact on how it operates and what impact it will have.
Well, Nana, our colleague Kudu Tseke put that very succinctly. We will be back after this short break. Do stay with us.
Trans Travel is your ultimate hookup on all things arts, travel, entertainment, and lifestyle. We go far and wide discovering the world's undiscovered wonders. So be sure not to miss Trans Travel every Saturday at 5:30 p.m.
We do not just speak, we let every voice in our nation find full expression in language and in culture. We do not just teach, we empower all people with education. We do not just bring you the news, we place you where the news is happening. We do not just entertain, we take you on journeys. We do not just broadcast sport, we create an arena for sporting heroes to inspire you. Ours is not just a job, it's a calling to ensure that everyone in our nation is informed, educated, and entertained. We're able to do this because you do your part. SABC TV licenses, it's all made possible by you.
Well, welcome back to Economics Unbound. I'm joined in studio by Economic Freedom Fighters Deputy President Floyd Shivambu. Welcome and thank you for joining us.
Thank
You're
you
most
very
welcome
much,
at the SABC.
Yes.
Now, you in your manifesto have included the idea of South Africa introducing a sovereign wealth fund. How did that come about and what's the thinking underlying the proposal?
Now, actually, the founding manifesto of the EFF, which was adopted in 2013, speaks about establishing a sovereign wealth fund as part of the many solutions that economically we should adopt as South Africa. So basically, you have dealt with the conceptual foundation of what a sovereign wealth fund is, that it must be a state-owned investment fund which must play an embodied role in terms of monetary policy, but also in terms of the fiscal interventions. So you gave an example of Norway, that in Norway now the sovereign wealth fund in Norway has got more than $1 trillion. That is like 14 trillion plus rands in terms of how it is. And in real terms, like we met 2 weeks ago with the Norwegian embassy here in South Africa, and they were explaining that in real terms, the contribution of the Norwegian Sovereign Wealth Fund to the fiscus there, to the National Revenue Fund, is equals to 500 billion, which is a significant intervention. Now, South Africa currently were dependent on taxes, on collection of taxes, like almost exclusively to fund our revenue in terms of what we call like income tax, personal income tax, company taxes, and the excise duties that are collected from different export and importers in terms of what happens. So we need in South Africa, long overdue, to establish a sovereign wealth fund which is going to play an active role in the fiscus, but also in terms of the monetary policy aspects of inflation, of how we deal with interest rates, because we are in a vulnerable space because the state is not playing a significant role. So that is part of the so many suggestions that the economic freedom fighters places on the agenda of South Africa.
Now let me take you back, Mr. Shivambu, to my curiosity as to what exactly about a sovereign wealth fund so attracts the fighters.
Look, we think that the sovereign wealth fund should be established for immediate challenges, but also for the future, because the resources that South Africa's economy is to a large extent dependent on or is founded on, like the mineral resources, are not infinite. Like they will be finished with time in terms of what happens. Even now with the discoveries of oil and gas, at some stage they're going to come to an end, or they might become irrelevant with new technologies being discovered.
Yes, so it's investing for the future.
Yes, we must invest for the future. We need to generate a value out of our economic resources. Because if you were to now gauge the entire mining sector's contribution to the taxes of South Africa is less than 20 billion rands. That is insignificant. It cannot finance even education of one province. And there can be other mechanisms to maximally collect revenue and economic benefits from the mineral resources, from the oil and gas, which are beginning to find economic expression here in South Africa. So we are talking about a sovereign wealth fund in the context of protecting the future, in the context of maximally benefiting out of our natural resources.
Yes, indeed. We can't just live for one generation alone, and that economic planning needs long lead times and visionary leadership.
Yes.
But I'm curious about how you answer the four main questions that countries that ponder the issue of sovereign wealth funds have to answer. The first issue is the nature of the mandate that you give to the sovereign wealth fund.
Yes.
The second is the investment philosophy, because presumably your sovereign wealth fund goes out and finds good yields and investments all over the globe. And the third one is the mandate as to how it is deployed to help the country. Is it deployed for development and social purposes, or is it strictly limited to times when there is a budget deficit? And the other thing is governance.
Yes.
How do we govern best a sovereign wealth fund? Issues of transparency, because Malaysia's sovereign wealth fund was severely looted.
Look, I think that from the beginning, like we made a policy submission in Parliament as the EFF, and as part of the key aspects there on governance issues was that the legislation that must establish the sovereign wealth fund should insulate it from political micromanagement, so that the budget shortfalls do not just give the politicians the right to go and loot the sovereign wealth fund to cover the shortfalls of the budget. Like in no way there's an agreement in principle that, which is in law, that you cannot take more than 5% or even lesser than that from the sovereign wealth fund's income and use it for government purposes. So we need to legislate it clearly that there must not be a political micromanagement in terms of what happens. But also in South Africa, I think we have got adequate state capacity to run a sovereign wealth fund, and that is illustrated by the fact that despite the minor challenges that define the Public Investment Corporation, It is the biggest asset manager in South Africa with more than 2
But you
trillion
would
assets under
admit
management.
that corruption
then in
and
terms of,
transparency were an issue even with the management of those funds?
That is one issue that must be emphasized, that the transparency must be guaranteed in the sovereign wealth fund. There must be open engagement, and the investment philosophy must be developmental. We must unapologetically say that the investment philosophy of the sovereign wealth fund must be developmental, must be creation of jobs, and in certain instances must be intervention in the fiscus of the country wherever there are necessities. And there must be a clear framework in terms of to what extent do you take money from the sovereign wealth fund to help with the fiscal crisis that we are currently facing as a country of more than 200 billion budget deficit, of debt levels that are now approaching 60% of the GDP in terms of how it is. So we need another instrument to play a clearly defined role in the economy and in terms of how we deal with all
precisely
these
because
issues.
we are not running a budget surplus at the moment. We haven't run a budget surplus since Trevor Manuel walked into Parliament and put fruits on the desks of the MPs and said these were the sweet fruits of liberty. So we haven't run a budget surplus since those days. That many economists have begun to wonder where we would get the funds from. Where would the funds be drawn from, Mr. Shivambu, in your suggestion?
There are different models through which we can finance the sovereign wealth fund. So in the policy submission that we've made, we say that, one, it could be through direct government appropriation. So out of the budget, with difficulties to say that, let us give the sovereign wealth fund a startup fund of 100 billion rands to invest, because if you've got proper investment practitioners and policies, you can generate a value out of that 100 billion. In a short space of time, it can double, later on triple, in terms of what is needed. Alternatively, you can legislate the state's participation in the resources sector. So the minerals.
So you're proposing a bigger clawback for the people
the
and for the state
sector,
from the resoases sector?
Yes, like in the resources sector, like, you know, the minerals.
And you give them what in exchange?
Now look, the Minerals and Petroleum Resources Development Bill, which was withdrawn by the current administration, was beginning to suggest that in all greenfields projects, in the oil, gas and mineral sector, the state must have 30% ownership as free carry shares that would, if you have a sovereign wealth fund, be held by the sovereign wealth fund. That is part of the interventions that can be looked into in terms of all those issues. And the other aspect, by the way, which we say is that you can establish it as a component from the PIC side. The PIC is overexposed in many companies that is invested in. We gave an example that in NARSPAS, the PIC has got investments which is equivalent to 250 billion or more. So you can top slice all the shares that the PIC have in all these companies in the JSE and say that let us have a sound business dealing with the sovereign wealth fund, and then you top slice all those interests into the sovereign wealth fund. It continues to generate income. The PIC, by the way, earns currently more than 150 billion rands in dividends out of the investments that they have in different companies. So imagine if that dividend flow was going into the sovereign wealth fund, it was going to boost our economy in terms of attracting even some additional investments, but it was going to deal with the fiscal challenges that we're facing.
Now let me take you back to the governance ugly duckling of the world sovereign wealth funds. That is the Malaysian one that was utterly looted and so on. And upon thinking and reflecting on the Malaysian example and looking at the Norwegian example, which, as I said, is the poster kid for good governance in terms of sovereign wealth funds, is it important for us, if we were to do a sovereign wealth fund, to legislate a multi-stakeholder governance structure so that all the interests in society keep each other in check should people want to overreach into and dip into the sovereign wealth fund and its governance? So in addition to transparency, you would then have strict laws about which sectors and underlying constituencies, like workers, if pension funds are involved, unions, civil society and industry, and so on and so forth. how would you see ours panning out? Would you give it a multi-stakeholder?
Yeah. Look. It's one of the things. So you'll remember when we made a submission on the establishment of a state bank in Parliament. We already, as the EFF, spoke about a different model of how state-owned companies and entities should be owned. That instead of a single minister being a single shareholder of a huge corporation like Transnet or Eskom, you need a different approach. You must expose different entities which are state-owned into the ownership and control and giving guidance to these state-owned companies. Because if it is one person who is responsible of Eskom, like let's say Pravin Gordhan, he's overwhelmed by subjectivity. He wants to impose his own people who just agree with him. But if there is, of course, different other people who will play a role in terms of management of all these entities, there can be a better way of how we hold each other accountable and dealing with all these entities in a sound and accountable way. And so the perspective, yes, that perspective of saying, let us have a multi-stakeholder control and ownership model could be applicable to a sovereign wealth fund in South Africa. And by the way, like the Malaysian example is one. There are very many successful sovereign wealth funds in China, in Singapore,
China is 3.
in Abu Dhabi, and in many other countries. Even the attempts in Angola was beginning to yield some benefits.
And
out
Nigeria
of it.
now
Nigeria now is beginning to establish one. So South Africa as well should come to establish a sovereign wealth fund in a manner in which will be suitable. There's lots of lessons that we have derived and observed in how certain state-owned companies were mismanaged. So we can learn out of that and legislate a proper sovereign wealth fund which will be accountable.
On that
to all
note,
the people. Yes.
it's clear that the communication around sovereign wealth funds would be tricky footwork because it's all ideologically laden at the moment. But with that, this country would be able to look at it in a more technical way. Please write to us, dear viewers, at tvbusiness@sabc.co.za. And if you would like to express a view from Nana and myself, we would welcome your views. And to our esteemed guests, thank you very much and good night. Good night. Khonantin Mawethu.